The jobs report coming up again at 8:30 a.m. Eastern time. How important is this not only to the markets when we're talking about stocks, but also the bond market? I'm looking at the 10-year. It's risen about 15 basis points following that stronger than expected ADP report yesterday.
Yeah, so it appears to be betting on the over. And as you said, there's a range that people are looking at. So anything over 200, 225 puts the Fed sort of back on the table. Anything below 100 puts recession back on the table. So we really need to see what's going to happen in that range. I think the number that's more important is actually the average hourly earnings, because we haven't broken through 4% or below 4% in 3 years. So I think that's the bigger of the numbers. But the markets were priced for perfection going into the end of the year. Now they're having to dial back rate cut expectations. And so they're just jittery here in early January.
Yeah, definitely a jittery market this week. We're just talking about the markets possibly snapping their 9-week win streak. I know you're also looking at the broadening out of the market. You're actually telling your clients to look at equal weighted index. So one of them is the S&P equal weight. The other one's one I actually hadn't heard of. The triple QE, that's the NASDAQ 100 equal weight. Why do you think the equal weight indexes are the place to be right now?
Well, the Magnificent Seven stocks had a great run. Actually, they really just stabilized the challenges they had the year before, but nonetheless, they end up being 30% of the S&P 500. They're now a funding currency. Nobody really wanted to sell those into year end because you needed to show you owned them in your portfolio if you were an active manager. So maybe you deferred the tax ramifications and the optics into 2024, and now you're selling and trying to figure out where to go. Well, last year you didn't really have anywhere else to go because earnings in the S&P are going to end up being up 1% on the year. Earnings in mid caps and small caps were down double digits. This year, you're going to get earnings up double digits in small caps and mid caps. So you just have a much longer menu to choose from, and you've got overexposure to 7 names. And like you said, Apple, I think that's really interesting what's going on with Apple and Microsoft, because in my head, Microsoft's gone from a monetization company to an innovation company, and that warrants maybe this $3 trillion valuation. Apple appears to have gone from an innovation company to a monetization company, and that's why you see deflation there. So how exciting is Apple? And it's 10% of the cubes. I'd rather just be in the middle of that pack and let the earnings drive me higher.